I think the opportunity here is the space is 2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. So that's the biggest mega trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade. When I first did the first piece of work on Bitcoin back in 2013, I said it was worth $1 million.
Yeah.
And I don't think that's wildly wrong. If Bitcoin's at $1 million, the space is somewhere close to my target of 100 trillion, or maybe it's 50 trillion. Doesn't matter. It's just gigantic.
In a recent conversation with Raoul Pal on the Empire podcast, the focus was on the evolving landscape of cryptocurrency, the potential influence of the upcoming US election on the market, and the broader future of digital assets. Pal shared his insights on what he calls the everything code, linking it to global liquidity trends and the credit cycle. He predicts that we are on the verge of a period marked by an unprecedented surge in liquidity, which could fuel a significant rally in risk assets, including cryptocurrencies, pushing them to new highs. Make sure to watch to the end of this video, where Raoul talks through his thesis of the everything code. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Raoul Pal.
So very simply, something I call the everything code is from 2008, we had a global debt reset. Now, as opposed to letting go of all the debts, what they did was cut interest rates to zero and said nobody needs to pay interest rates. Okay, that was a huge advantage for the system, and everybody reset their debts for this 3 to 5 year sector. So then the debt refi cycle, when they have to refinance the interest payments and the debts, drive the business cycle. The business cycle's always been the credit cycle. So now it's become almost perfectly 4 years. The only other time in history it was perfect like this was back in the 50s and 60s after World War II and the financial repression then. So there's financial repression going on, but it goes in this 4 year cycle. The 4 year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the interest payments. Usually what they do is they inject enough liquidity into the system to pay for this, because there's not enough GDP growth to pay for it all. And so we go on to the next cycle. So that's really what drives all assets right now. Everything is basically correlated. But out of that, there's one asset that does a lot better because it's got the secular adoption curve, which is crypto, plus the macro tailwind of debasement of currency and the cycle. So that's where we are in the cycle now. Zoning into election year. Well, this is when they start giving out money. They also have a lot of refi to do. So it tends to be a very good back end of the election year. And then the following year tends to be very, very strong too. But this is a global thing as well. Every major central bank is refining their debts in the same cycle. The Europeans, the Japanese, the Canadians, the Brits, and the Chinese. Now, what you always look for in these refi cycles is who's the weakest link, because they're likely the ones to do the most stimulus. It's probably China this time around. Just came on the tapes just now. I think Felix actually just tweeted it out. There was a Bloomberg story that I've been talking about for a while, is the US and China have agreed to kind of help each other. They said, China's central bank says a meeting in Shanghai produced an agreement with the US Treasury to appoint contact people to deal with any future financial stress events. So they've got a dollar shortage. And what they're basically saying here is the Fed will get dollars to them. I think this is one of the reasons what Japan has been doing in the yen as well, because the euro-dollar market is driven through the Japanese banks. Yeah, I mean, I was looking at the 10-year bond rate, which is actually a big influence on the crypto price, bizarrely. And 10-year yields in China are at like 2.1% or something, and they just look like they're going to approximately zero. And we know this because this is the Japan playbook, right? When you've got an aging population aging as fast as that, you've actually lost control of your growth engine. So the natural rate of interest rates has to be much lower. And it
Yeah.
shows you've got a debt crisis. And what we're seeing now is the flip side of everything that Dan's saying. So the flip side is people start cutting rates. You start easing conditions. Bond yields start to fall everywhere. The dollar starts to fall. That eases
the
up.
dollar's in a bear market now.
That's right.
I mean,
And
it just kicked off a few weeks ago.
That's right. Now it means it eases financial conditions for everybody. That drives the business cycle. As the business cycle picks up, people have more earnings, they invest stuff, markets go up, and that pattern has always gone on, the business cycle.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.